It's not just not working, it's broken.
The banking infrastructure in each of these countries speaks its own language.
That can be very confusing.
Each language, creates an inefficiency.
And a lot of times we think about the outflow, not the inflow.
Our notion of real-time has also accelerated, and now is now.
We're really good in the US with coming up with new ways, but we're really bad at getting rid of the old ones.
It's not a coincidence, it's commitment. None of us came from financial sector.
Fully open banking and allowing access when someone asks for it, guess what? They still have to do it. This isn't anything new.
And so it's not about how you're thinking, it's about what you are doing towards it. You have to make it happen.
Welcome to Fintech Confidential, bringing you the people, tech, and companies that change how you pay and get paid. You're building a fintech product. You want to offer digital assets, but wallets? That's the hard part. Security, compliance, key orchestration, blockchain integration. That's why fintechs, payment platforms, and custodians choose Dfns. They provide wallets as a service that's API first, multi-chain by design, and secured within PC. No single point of failure. So you can launch across over 50 blockchains, automate policy controls, and stay audit ready without managing private keys. Stripe's Bridge powers crypto payments through Dfns. MoonPay scales wallets securely with Dfns. Sphere grew without compromising on control or compliance. Even major FIs like Fidelity, ABN AMRO, as well as custodians like Zodia and Tungsten trust Dfns to power their on-chain infrastructure. Developer ready, compliance approved, production grade from day one. If you're building in payments, exchanges, OTC desks, market makers, or DeFi, Dfns wallets work the way you need them to. Request your demo at fintechconfidential.com/DFNS. Dfns, secure wallets built right.
Welcome to Fintech Confidential Leaders One-on-One series. I'm Ted Huff, your host and the CEO of fintech advisory firm Voalyre. This is where I sit down with the people who are actually building the infrastructure underneath fintech. Not just talking about it, actually building it. And my guest today is Ximena Aleman, the co-founder and co-CEO of Prometeo. And if you're not already tracking them, here's the short version for you. They've built an open finance infrastructure platform that connects over 7,500 financial institutions across Latin America and the United States. And it's all done with a single API. They've been backed by some enormous players in the industry: PayPal Ventures, Samsung Next, Antler Elevate. Ximena was also named one of the top 100 women in fintech back in 2024. And this literally just dropped this morning. Prometeo was just named a Nacha preferred partner for account validation and open banking. And yes, we will definitely, absolutely get into that. So Ximena, welcome to the show.
Hi, Ted. Thanks for having me. Very happy to be here talking all things fintech.
Hopefully I can get a little bit of confidential pieces out of you as we talk today. But folks, open finance is, as a concept itself, is become mainstream. So, when you started, it really wasn't, especially in Latin America. There are fragmented financial systems, inconsistent APIs. Most of the fintechs were building one-off integrations just to figure out how to move a little bit of money here and there. You saw something a little different, and that's why you decided to build Prometeo at a time really when open finance wasn't even a term for people in Latin America. I'm really curious. What did you see that others weren't paying attention to?
Well, I think that we might be a little bit nuts. It was not just about focusing in the details, being outsiders that drove us to being able to see something that was not there, And I think that was the key thing with us. I come from a different area, like I majored in journalism, then went to work with media outlets, and then focused into marketing, sales, then an MBA in tech, because I saw the tech was,
Because why not,
yeah,
right?
exactly, because why not? No, and I really loved it, and for me it was a life-changing experience, of course. But then Rodrigo, who is co-founder and co-CEO alongside me, his background was cybersecurity, and then Eduardo, who was CTO, his background was API development. And so none of us came from like the financial sector. Like, we didn't have that background, that experience, that knowledge. And I thought that, and I think that because that, we were able to understand where the problem was and think that we could actually address it. I think that perhaps if it was the other way around, if we had like a long trajectory, like working in the like largest brands, financial brands in LatAm, Itaú, Santander, like I think that we might have just keep it, like thinking, okay, this is how it works, and it works like this because it works like this. But I think that it was actually not understanding how it worked, but actually understanding how it should work, that we were able to think, okay, this is something that should exist. Let's build it.
So when you look back at the early days, what was the moment when you knew that this was a real infrastructure gap, not just like a technical inconvenience?
I think that for me, infrastructure came as a concept at the same time that when we started building this, like for us, open banking wasn't even a word, like we started building this API infrastructure even before Prometeo, in our previous startup, which was a personal finance manager. And so we have created like this interoperability engine with different financial institutions that allowed us to connect with them. I think that back then we would start talking, of course, digital transformation, API adoption, and that this was a thing happening in the fintech space. But actually, the fintech space was something new. Like, I am based in Uruguay, I am Uruguayan, and I always joke that that fintech wasn't even a word, because we started talking about fintech like 2 years after that, and like everything comes later to Uruguay. This is something that all Uruguayans mention. And so fintech wasn't even a word, but I remember pitching like this notion, like this concept about this middleware, this API middleware that we are building, this infrastructure, because the value is not in the middleware itself, but actually what this middleware enables. And that's why it's infrastructure. Like thinking about it in terms of like the technology that enables other technologies, other products and services to happen, to move around, to create value for the society. And that was the insight. And then it became, of course, like, okay, there's a vertical in the fintech space, which is infrastructure, but that happened like years after that first pitch. And I am truly a true believer of this concept, like that actually what we are building is the rails in which the financial sector will move in the years to come. And I think that we will talk AI later on this podcast, this conversation. But something that for me is overwhelming, that amazes me, is understanding the impact that AI will have in financial infrastructure and vice versa. Like, I remember like when pitching this concept about open banking being infrastructure, and we building infrastructure. Of course, like the next question was, okay, but infrastructure for what? What will happen over this infrastructure? And back then, like use cases, there were like very small. Like you could mention like what you could think about, and PFM, personal finance manager, of course, was one of them, like credit scoring, of course, was one of them, but what else? And so I would always say, like, we are thinking with the tools that we have now, but eventually something else will come. And this infrastructure will make sense, not for these use cases, but actually for what will come next. And so when I saw like the impact of AI and especially agentic AI, it became so obvious that this infrastructure would serve that and would power that movement. For me, like I consider this like one of my big wins, you know.
Well, I mean, in that context, right? Building infrastructure in these markets, you can't always or seldom are able to wait until the regulators have mandated very specific standards and is actually the exact lens that I think we need to understand your expansion into the US. Maybe we could move into talking more about I guess I would call it borderless banking is probably the way I would approach it. You've really gone beyond the original idea. The piece that a lot of people talk about also that I work with is they're always looking at Latin America. Like that's like the largest corridor for especially B2B payments in the world between the US specifically. Like the US to LatAm is huge for that. And the number one problem that we always run into is that there's all this legacy cross-border banking infrastructure. And I know you've run into it as well. It's like it's not just not working. It's broken.
It's broken. Yeah.
Um, and like they're like this huge swing where it's going. And I had the conversation with Keith Vanderleest from BVNK on, and I met with him at FinTech NerdCon last year and sat down with him. And one of the things that really surprised us as we were looking at some of the information preparing for it is the sheer amount of volume of traffic and transaction value coming from LatAm into the US. And a lot of times we think about the outflow, not the inflow.
Flow.
So this is my roundabout way of saying like
Yeah.
walk me through. I mean, it's a huge swing, right? So walk me through what borderless banking actually is, because I think when people hear the word borderless, they immediately picture the diaspora communities. They think of, all of these other things, but don't look really behind that. So just help us paint a picture, help us
Yes.
understand like what does borderless mean to Prometeo and Ximena?
I agree. The system is broken. That's the kickoff of the conversation. But the system is not broken in the US, as it is not broken in Mexico or in Colombia or in Chile. Like the system is broken because it works at a local scale. And we've done a lot to upgrade those local schemes, with real time payments, with new players, with blah, blah, blah. Like a lot has happened over the last 8 to 10 years. But still, when you look at it from a global perspective, it keeps being broken. And this is because global trade has accelerated, expanded, and the way we approach time has changed. Like 5 years ago, like 12 hours was half a day. It was like, okay, the time that it is. But now the time that it is real time. Like we are always benchmarking with real time. And our notion of real time has also accelerated. A couple of years ago, real time was 1, 2 minutes. And now I'm talking with customers and I'm saying like real time is 3 to 5 seconds. And they are saying like, no, it's milliseconds. Of course, it's hard for infrastructures globally keep upgrading to this behavioral rhythm that we're having, like everything, like real time is now, and now is now. It's not within 2 seconds or 1 minute, is now. And so I think that when you look at it from a global perspective, besides this behavioral change, you also have like this thing about countries, each country working differently, but at the same time working alongside all the rest. I know that I mentioned that I am based in Uruguay. And so when we started, like for us, doing a thing in Uruguay just for Uruguay was such a narrow market, and it became obvious that we could, with our infrastructure, address the region. And so pan regional, like Prometeo became pan regional from the kickoff. 30 countries. Each of these countries has its speaks its own language. Like I always say, its own taste, just its own flavor to Spanish, and it's very different. Like órale in Mexican, or the yapo in Chile, el ta, which is very Uruguayan. The infrastructure in each of these, the banking infrastructure in each of these countries speaks its own language. Okay, and so how you bridge that, like because each language it creates an inefficiency, difficulty when they need to work together. And we started addressing all of these inefficiencies, and standardizing this layer. We realized, like, of course, but we are not addressing the most important corridor that Latin America has, and that's the US.
Well, and that's kind of where I'm sitting here listening to the way you described this, right? And it's like I'm starting to look at as like, what is the friction point that the legacy, like you moving into the US and all these cross-border pieces, what is like the most frictionful point that these solutions have historically missed? And why do you think your experience of having to bridge those gaps in these Latin American countries that are similar but different give you and Prometeo a specific edge in solving it when crossing over into the rest of the Americas?
The first thing that I will point out, which I feel might be a little bit of polemic, is that we tend, from LatAm, we tend to perceive the US first world infrastructure, developed country, a lot of financial penetration, like a lot of fintech adoption, fintech disruption. But when you double click in how the banking system works, I would say that the infrastructure feels rather emerging, you know? And so, from a banking infrastructure perspective, you wouldn't say that the US has a leapfrog any country in Latin America, you know? And so, the US banking system is perhaps as broken as the LatAm banking system. When we double click, we could see the same gaps in the infrastructure. Many times, they are overlooked because the credit card rails work that well, and so, okay, like I have a credit card and I don't need this or that because this works over Visa's infrastructure. And so that's why the bank, like the financial infrastructure is perceived as so robust and mature. But when we talk about the banking system, it's not. Okay. And so I think that that was the first thing that we needed to like somehow reframe in order to understand that there was an opportunity in the US.
I think it's really I love how you've positioned that because a lot of times, even when I have clients that are in other parts of the world, the idea of US having a mature ecosystem. Yes, the ecosystem itself is mature, but a lot of times it's misunderstood that the technology may not be that mature or it may be overly mature. Maybe it's at the end of their life, right? And there's a heavy leaning on that side of it, which then introduces its own set of problems for speed, accuracy, the number of players that have to be put in place. It's like although it is again, it's mature. It like I love how you said it. Is
Because
it's
I think that the thing is, when you look at it, it's mature. Why? And then you start to understand which are the components, the pieces that are mature and which are the ones that are not, you know? And it's always like that. You have to somehow disaggregate in order to understand where is the nuance.
we would say we jokingly like me and a number of folks that I work with in payments, especially bank to bank side payments, is that we jokingly say we're really good in the US with coming up with new ways to move money, but we're really bad at getting rid of the old ones. And I think that is a piece that when you look at it from an organization coming into the US, that can be very confusing because there haven't been any government mandates that really say you can no longer use this, you must use that. Like that just doesn't happen. And so we get this, it just keeps stacking on top of each other. So you have all these choices, all these options, and they all work completely different. They all have different rules, they all have different timing, they all have like different infrastructures. It can be exhausting
Yeah.
to try and figure out how to try and normalize this.
Yes, exactly. And I think that that's where we provide value because from our experience in LatAm, basically what we had to do was leaving aside differences and understand which are the commonalities, like how can we create the standardization? How can we put together fragmented systems? What's the important thing that needs to be there time after time after time? Is the date? Is the balance? What is it? Which is the relevant information? And so that standardization that we were able to build is what we bring as a value to the US, understanding what needs to be there and what is noise, what isn't just noise and needs to be aside. And yeah, and I think that that's the power of standardization.
And I think, to kind of round out talking about borderless banking, I mean, yes, infrastructure does solve some of these pieces for moving money across borders, but that isn't the only piece. Like you mentioned earlier, the experience, the data, like all of these different things I thought was really exciting. And you and I talked about this at Money 2020 last year here in Las Vegas. You all had decided like we're looking really heavily into agentic banking. And that was at a time when like I know it's only been a few months, but it's kind of hilarious to me that even back in October, that was just kind of like, yeah, that's a really cool idea that we might go explore. But you move fast forward to today, and that is a super important topic that everybody is doing it. And the fact that you become this massive infrastructure provider in Latin America, you launched agentic banking solution. That is a big thing to do. So I would love for you to help me kind of unpack it and really define what agentic banking is. And let's start with how you've done it in LatAm, and then we'll talk about maybe like where you're going. Like, is
Yes,
it
definitely.
tools? Is it like there's so many open questions here. So I'll just let you get started.
So agents are here to stay. Basically, what they need to do is they need to operate financial infrastructure. And that was the kickoff for us. When we understood that through our documentation, an agent won't be able to connect with our platform, we said we need to change this because in the very near future, our API won't be integrated by a developer. Our API will be integrated by an agent. And so basically, what we've done over time is to create the modules that allow agents to connect to Prometeo and start using our platform.
This makes me think like there's a big difference between delivering AI tools that are to be used inside of fintech, kind of what you're talking about, doing that integration using an agent. And then you got the other side, at least my opinion, of AI agents that are executing on financial actions. Which one of these or both are you going down the path, and why does this distinction matter? Does the distinction matter between the tools that you use and the actions that it takes, or is it symbiotic?
I think it feels for Prometeo is sort of symbiotic, like the two things go combined. I think that where we perhaps provide more value is by enabling agents to operate their own bank accounts. And how we have approached it at Prometeo, at least, is basically through the question in which way can we limit the liability of an agent moving money? And so basically, that's creating a system that the agent can operate, but it's somehow safe environment, meaning that it's restricted to the things that bank account it's enabled to move and operate. Okay, and so by limiting the scope of the bank account, you are limiting the capabilities that that agent has. Okay, but at the same time, you are enabling that agent to move money, to make payments, and to understand the financial information that money movement has created.
Now you get me going down my compliance hat starts to go on, right? Like, and it's nice and snug, right?
No.
Squeezing the brain a little bit. what does the regulatory compliance side of this look like for you at Prometeo when you realize that the entity that's initiating this transaction, whether it's a payment, whether it's opening a new account, whatever this action is, ends up being a large language model or some other AI agent? How are you solving for the audibility and liability in these agentic workflows? Because that seems to be the thing that every financial institution that I talk to and every agentic company I work with is like, I'm seeing or trying to figure out how to manage through this piece of it. And this is like concern number one at this point.
Definitely, and that's my impression as well across Latin America. Like I should agree, it is compliance adaptation that we are going through, but basically our system is fully auditable, and at the same time, the agents that can operate that those bank accounts are agents that have been onboarded to our platform, and so we are full B2B. That means that there is a company that's responsible for that agent, and it's granting permission to that agent to do this or that. And so it's not that our platform it's open for agents everywhere to open their bank accounts, but actually that we are engaging with companies that can enable that want to enable their agents to operate certain bank accounts. And I think that somehow that frames liability and compliance and make it more addressable and manageable. But I think that that's part of the transition. Like we have to go through that path in order to this to get more adoption. And I think that's something that happens in LatAm, different to the US, is that, as I mentioned before, in the US, the more robust infrastructure, financial infrastructure, is perhaps the one from Visa and Master. In Latin America, most financial inclusion and most, yeah, I would say, financial inclusion has been through alternative payment methods, through banking accounts, through neobanks, and so through
So
wallets.
anything but card payments is what it sounds like, right?
Exactly. And so Visa's infrastructure is not the prevailing, is not the most important. And so how can we upgrade the level of infrastructure of these players in order to make them agentic ready? That's our task.
OpenClaw has been out. A lot of people have been using it. They've been leveraging it. The number one concern with that is security and locking that down so that it doesn't do things you don't want it to do and doesn't spend money you don't want it to spend and all these different things. And especially with Prometeo being the B2B side of the piece of it, how are you making sure that the agent that is making the action happen is the agent that is supposed to be doing it and has been given authority to do so?
That's embedded into the system because auditability and monitoring of the transactions is a key component of the cybersecurity that we provide. Okay. And so it's not that the agent is there like just transacting, but it's actually that we have a system that allows us to monitor how the agent is acting. And I think that that's the key component. Sometimes I feel it's overlooked that when we transact through any platform, that platform has systems that are monitoring how we transact. And we have flags, we have alerts. Visa like sends you an SMS, sends you a notification, sends you an email. Your bank as well, like, is this purchase yours? Are you doing this transaction? And that is happening because the system is monitoring our activity. The same happens when you are enabling an agent to perform transactions. You have to monitor how that agent is performing. That's what I'm referring when I'm talking about monitoring and audit the transactionality of the agent. Is actually be reading what is happening, and making sure that the agent is acting the way it should act and that the system is being approached the way that it should approach. But what I stress here is that this is a core component of the financial infrastructure everywhere. It's not something new. It's not something that it's that is happening because we are releasing agents. This is something that our platform already has. because we enable payments, because we make verification of PE, because we enable access to balances and movements. Our system has been designed to be secure, to be compliant. And so we have monitoring systems that monitor everything that's happening in our platform.
Support provided by Skyflow. What if you could build fast but not break privacy? What if you could ensure data privacy, governance, and compliance with just a few API calls? What if you could worry less about PCI requirements while actually improving privacy and security? How much more time would your team have to truly innovate? How much faster could you build and ship new features? How much more powerful could your app be? Skyflow is a zero-trust data privacy vault delivered as an API. Skyflow's radically simple design lets you collect, secure, and tokenize personal information like card data and payment details. And with built-in features like encrypted data analysis and sharing, anonymization, and advanced governance, your days of choosing between data security and data usability are over. Whether you're just concerned with PCI compliance or need to go further to include CCPA, GDPR, SOC 2, and beyond, Skyflow has you covered. What if you could build fast but not break privacy? With Skyflow, you can. Visit skyflowsecure.com today to learn how.
You still have the perspective of human in the loop type scenarios, right? And like the discussions I've had, and I feel like a broken record because every time I talk about AI and agentic and all these different pieces, I always say we're in the age of bookends. We have the side that has all the information and can regurgitate it back to us so that we can make a decision on what to do. And then we have the agents that once we've decided what we want to do can actually execute on it for us. But we've got this messy middle that everybody's still trying to figure out. And I think the way that Prometeo has approached it really puts you on the cutting edge of what these types of infrastructures can do. And it really creates like this third thread, I guess I would say, that kind of ties it all together. It's about where you're building the credibility in the US market now. I mean, like you guys had an announcement just today, April 14th. Is the no, today's the 15th. See, I can't even get my days right. So April 15th with the Nacha preferred partner. If we go back a little bit in December, you made the announcement of the name match feature with your US verification API. If we go, heck, I skipped over January, the FDATA membership that you had in place there. Like there's so many things that you're doing, and I think it's important for me to understand this isn't a coincidence, right? Like these things didn't just happen to happen. You sequence these deliberately. What does it mean to you being a preferred partner, and what does it unlock for Prometeo in the US? And last but not least, what did it take to get there?
It's not a coincidence, it's commitment. We are fully committed to providing best-in-class financial infrastructure in the US. And that's what we have been doing since we decided that we would actively create product in the US. Why verification of payee? For us, account verification, account ownership, or global account verification, it has many different names. All of them means very similar to the same, which is being able to verify a bank account before sending a payment, being able to verify account ownership over the account. This is an infrastructure that we've been creating in Latin America over the last 5 years. We are the go-to player for account verification extensively in LatAm. We've gathered very relevant experience on how to build this infrastructure, and that's what we are taking to the US, that sort of experience. As I mentioned before, what is the experience about? It's about fragmented markets. What is the US? A very fragmented market. And so
It's
I
way
think
more fragmented than a lot of people think because, yes, we've got some federal regulations, but we've got at least 50, if not 51 different jurisdictions that have their own rules. And then within those jurisdictions, they have tens, if not
crazy.
hundreds of additional jurisdictions. And it kind of, the macro level of it gets so convoluted at some point. So
It's
it's like,
crazy,
it's
and
crazy.
I think that's something that different from the US, from LatAm, is that in the US you don't have like a central repository of banking data. basically what we are doing is leveraging the infrastructure, the experience that we've had in LatAm about how to standardize this fragmentation, how we can create understanding from this fragmentation. And basically, we've released our account verification product, and that allows our customers to be able to name match the bank accounts, like 85% of the bank accounts in the country, which is huge, improves a lot what's in the market right now. We are very bullish, very happy about the product that we've crafted for the US. And so I would say that it took the 5 previous years, like experience that we were able, yeah,
Tenacity, like just
yes,
not giving up.
definitely. And I think that also being able to understand that we could do it, that the experience that we have is pertinent to the problem that the US has. We can outperform what there's in the market right now. Something that also took a little bit of time for us to realize.
I do also want to hit on, and for everybody, I apologize for using yet another acronym. The FDATA is the Financial Data and Technology Association. And Ximena, you had joined them in January, and you've spoke at events about why Latin American fintech is moving north. I mean, we're talking. I mean, the FDATA is Canadian, so like you're going as far north as you pretty much can in the Americas with that one. This really kind of two pronged. One being sales, which we would expect. I mean, we want the company to be profitable, to make money and continue to grow. But there's also this advocacy and policy play that I feel like is in there as well. Do those two things have to happen together? Why did you decide to run them in tandem? Why did you decide to do the advocacy and the policy and leverage that to drive the sales?
Yeah. Yeah, the second part of my answer would be, I know that for Prometeo they are, because for us building infrastructure has not been about the billions that we could make by building the infrastructure, but actually believing about the impact that that infrastructure will have and the impact that we could build through our technology. And that's why the name is Prometeo, like the Prometheus is the Greek titan, the one that provided fire to the humans. He stole the fire from the gods and gave it to the humans. And I think that for us, it was always sort of that spirit, a little bit rebellious. I always joke that we feel it a little bit more humbly. But there is, in the core of our company, yes, a rebellious sentiment about the state of the financial sector and this eager about building it differently and being able to do it differently. And of course, like big part of this is state that we think that things can work in a different way. And we thought about it in LatAm and we think about it as like the Americas, like we think that everything can work differently. We really believe that there are benefits into having a single API standardizing this infrastructure because we believe that there's this bond between the regions, and that there's a natural corridor, as you mentioned. And so this creates development and this has this impact. That is what we want to see. And of course, that implies like we advocating for it, for this change, towards this change. Yes, of course, I feel like this creates a virtuous cycle because it makes the issue more relevant because at the same time people can relate, okay, Ximena, Prometeo, open banking, that work for us a lot in Latin America. And we were early adopters of open banking, pioneers that made us perhaps at the beginning, I'm talking 2018, we were the first one talking about open banking, like as I mentioned, we seemed like, okay, these nuts guys talking about open banking coming to Latin America, like they are 10 years ahead. And that might happen in the US, but we already have experience. So we will leverage the experience that we have being pioneers and talking about these issues that we feel are very near to our core.
Everything we've covered so far, I mean, from borderless banking, agentic banking, we talked about the latest Nacha news, the FDATA, realistically, all of these things are pointing towards one question. And that is, where does open finance go from here? And with that question, I have to reach over and pull out my fun crystal ball. This is my favorite part of every episode. So we're going to sit
I love it.
the crystal ball right here so you can look deep inside of it. Agentic banking is live today. Where does it go in the next 18 months? And what is the use case that makes it completely undeniable?
Payments, common people using it every day.
When you say common people using it every day, what does that mean to you?
My sister.
What would she use it for? How would she use it? Why would she use it?
Buy the uniform, like the school uniform for her daughter, buy clothes for her.
Well, so the next question I have, and again, I want you to keep looking forward. Help me see what's
18
out there that
months.
I can't see.
18 months.
18 months. Yep. So US open banking regulation. We have the CFPB 1333 still in motion. What does the regulatory environment accelerate in your US expansion? Or is this a headwind for you?
No, it accelerates definitely the expansion to the US. We will provide our open finance suite more completely.
You know, one of the conversations I had with David Glazer from Dwala, who's the CEO here in the US, you know, we looked at this. And one of the big things that we're talking about is the fact that it's widely known that JP Morgan charging for access for what we would consider open banking. Do you think that's right? And then secondarily, what do you think doing that does to the US market in the next 18 months?
Yes and no, and it delays. Financial institutions should charge for this is a yes and a no at the same time. I think that they shouldn't charge for certain use cases and they should charge for other ones. So I'm a convinced person that open banking should be partially free because open banking should address is the right of the user to access its financial data, and the access to that right should be for free at a certain point because it's my data that I am granting access to the bank that has my money. And so I'm already paying for that bank account. I'm already paying to the bank for certain services. And so being able to check my bank account or grant access to that information to a third party, that should be for free. Me, Ximena, as a end user persona. For certain use cases, I understand that monetization should exist and that you could monetize the API. But then I think that those should be particular APIs created particularly to provide value-added services on top of the open information. And I think that that's a little bit more complex, but I think that provides the granularity so that open banking creates impact and at the same time creates money and businesses. And so that's why yes and no. And then what I think is that if it's fully charged, like if every API call has a price, what we will have is like a slower adoption of open banking.
I appreciate that the bank feels that they need to charge for it because yes, they've got data security and they've got all this stuff and they've got to like do all this fun things. That's really cool. But guess what? Even without fully open banking and allowing access when someone asks for it, guess what? They still have to do it. This isn't anything new. They already have these restrictions in place. They've got like all these things in place. So I feel like this is analogous to when there were no free checking accounts in the US, when you had to pay to have a debit card, when you had to pay for like access to all of these financial tools. And I think right now it is a how long can I make money off of this until I can no longer make money off of it because it's an expectation
I
to have
know.
access to.
And I think that that's why focusing on JP Morgan, it's perhaps not like the ideal scenario, because when you talk about financial institutions, not all financial institutions are JP Morgans. And so in
True.
Latin America, for instance, what happens is that in the in best case scenario, you have a country in which not all the financial landscape is concentrated in four major banks. That happens in Uruguay, But then when you go to other countries, Brazil and Mexico, for instance, larger, you have more complexity. It's more diverse, the financial landscape. But you have many small financial institutions that are attending particular parts of the country, like towns, many similar to like credit unions. And so
Yeah.
you would expect them to adopt open banking. You would expect them to appify themselves, to provide access to this information. And so I believe that for those smaller financial institutions, you have to open the door for them to monetize, because what you want at the end of the day is for that they adopt the infrastructure. And they should provide part of that infrastructure for free. Like I'm convinced that this is what needs to happen. But at the same time, I think that they need to understand that there is a revenue stream that comes from having that infrastructure in place, because that's the driver of adoption that they have.
I can see that perspective, right? Is like the major pushback that I've gotten from community banks and credit unions when we talk about this. Because I like to ask their opinion. And they brought up a very similar perspective what you did is, hey, we're not a JP Morgan. Like we don't have billions of dollars to spend on infrastructure and all these different things. And, looking specifically at credit unions in the US, the idea is our goal is to make our members happy and give them as many tools as possible. And if I can't serve them in all these other areas because I'm spending so much money in this one area just to give them the ability, and this is something I've heard, give them the ability to share that information out to a third party who could meet or beat our products and services, am I not just doing a disservice to myself? And so, yes, it is extremely complicated. I probably take way too of an altruistic perspective on it. It's not the bank, it's not the FI's data. They shouldn't have control over it.
I totally agree, but I think that this fires back the JP Morgans of the world, the ones that have this infrastructure, and the ones that benefit from the innovation that will come over this infrastructure. It creates a vicious cycle of innovation and adoption that I think it's what my alternative prevents, or at least tries to. And this is like a rationale that comes, of course, from LatAm. Like how can we avoid like this sort of oligopolistic dynamics that we have in the financial sector in each country of Latin America, with four banks having 80% of the market share. And this is
Right.
like a reality in each of the countries. And so we need to drive innovation to smaller financial institutions. And so you have to create the drivers for them to adopt technology and innovation. I don't know.
Latin America versus the US model. You built first in Latin America. Now you're expanding into North America. Is the Latin American open finance model the one the US should be watching? Or is it a completely different problem?
It's a different problem from my perspective. The thing is, in the US, you already have I would call it de facto open banking, meaning that you already have companies that have built the network and the interoperability and that are providing this extensively, and you have already a mature open banking ecosystem, meaning that there are use cases that have showed that there is demand for these products, for these services, that users are interested in them, that they are willing to pay. And you have like the ultimate validation, which is large companies trying to approach this, like MasterCard buying Finicity, Visa trying to buy Plan. And this is like years ago. From a business perspective, the ecosystem is solid, is robust. In Latin America, has been the other way around. It's been very difficult to create the the interoperability with all the financial institutions. You have still, from a regulatory perspective, some countries have regulated open banking. Brazil, Colombia, it's on track. Chile has done so, and it's implementing the APIs. And then the rest of the country is different countries are discussing if yes or no, but it's like very, very, very early days. Here, the problem in the US, the problem is we need to address that this is a right that the user has, and we have to somehow regulate how this ecosystem works, because it has sensitive information. And so
Yeah.
we need to somehow let's clean the house. It feels like this. In Latin America, it's like, will there be a house here? Where do we put the walls? Okay. Like it's here or there, do this house should have a ceiling? And what else can happen over the house once the house is there? I believe that the regulatory conversation is much more mature in Latin America than the US, but the market adoption is by far much more mature in the US than in LatAm.
So you haven't done this on your own. You PayPal Ventures, Samsung Next, they're both on your cap table. And so I'm curious, what does strategic backing from those kinds of names, what does that make possible that just someone writing a check doesn't?
First, I would say there's a positioning layer, like these brands believing that you are the open banking option, that you are the infrastructure option they want to back. That's a signaling, and that builds trust. And that's something that we truly appreciate. Coming from Uruguay, from South America, it's a strong signal to the market. And I think that that's the first thing that you could perceive. The second one is because they backed us following a logic, what is that they are seeing, And so I think that large companies as PayPal, as Samsung, thinking that our infrastructure suits their needs, and that there are synergies for the companies to interact, and of course, direct access to their business teams, of course, which is something that it's also very valuable. Like it shortcuts you the way to those companies, which is great. And then I think that there's a third layer, which is a lot of proximity to environments that perhaps were not that near us before them. And that means like their network. So both companies as other investors that we have in our cap table, they have very valuable networks that they put at our disposal. And that provides a lot of value as well to the company.
So if you were to wrap all that up into like one statement, why is it important to have players like that and others on your cap table?
They provide trust.
I like that. I like that a lot. All right. So you are listed in the top 100 women in fintech from 2024. You're building in a sector that still has a significant representation gap in that. What does it mean to you to have received that recognition of being a top woman in fintech? And what do you feel still needs to change?
What needs to change is the investment gap, the funding gap. That's first thing that needs to change. The funding gap to female-led startups is huge, like 2% of the VC investment goes to 2% last time I checked. Perhaps now it's like 3. I don't know, but it's significant, the funding gap between female-led and male-led startups across the globe. And I think that definitely is something that shows that there is a systemic, that is not just women not being able to fundraise or not understanding the codes, or not, like, it's a systemic issue that should be addressed, like that we all need to understand that it's systemic and see how we can approach it and prevent it. And then about being listed in that ranking, of course, makes me proud. It's a recognition. It's not something that I think a lot about.
Appreciate you being very humble about that. What you've been able to accomplish with this is almost unbelievable from the approach that you guys have taken and the way you've brought it to market. So yeah, I would say well deserved. And I appreciate you being humble about it.
Thank you.
And I have one last question for you, and it's not an easy one, so just bear with me.
Oh, okay.
If you had to give builders, operators, and founders one sentence of advice that they had to adhere to in the next 12 to 24 months to be successful, what would it be and why?
You know that thing about the decision is not right or wrong. You make it right or wrong. Do you know
And
that?
why is it important that you look at a decision as not being right or wrong, but the way you perceive it to be?
Because I think that most of the time we doubt ourselves and our thinking path, like how we are thinking about things. Frequently, we do not have the answer, especially if you're an entrepreneur. There is no right or wrong per se. It's about how you will act towards the reality that where you are and what you want to build. And so I think that many times, like, just thinking about is this or that creates a sense of uncertainty that makes it even more prevalent, the feeling of uncertainty, because you don't know, will this happen or not? Will this happen or not? Will this happen or not? You don't know. It's like the crystal ball, you don't know. You have to make it happen. And so
Right.
it's not about how you're thinking about it. It's about what you are doing towards it.
Ximena, this conversation is exactly what I was hoping it would be. I can't thank you so much for taking the time out, for building what you're building. Not only that, but not keeping it to yourself in Latin America and bringing it up north here. So I really appreciate the time that you've taken with us today.
Ted, it was a fantastic conversation. Thank you very much for having me, and thank you very much for your time.
Well, folks, that does it for an episode of Fintech Confidential's Leaders One-on-One series. And if this discussion about open finance and what's coming next got your attention, that's great, because there's more from where that came from. Go ahead, head over to YouTube, Spotify, Apple Podcasts, or wherever you listen and hit that follow button. And if you want to stay plugged into everything we're doing here and everything we're tracking, go over to fintechconfidential.com and get signed up. That is where all the deep dives live. That's where all the newsletters are at. If you want to find something out, that is where you go. And be sure to share this with someone who is serious about where fintech is going. And as always, keep moving forward.
As we wrap up today's episode, I've got one last thing for you. If you're in the trenches fighting fraud and financial crime, you know it's a complex battlefield. That's where Hawk's AI tools for real-time payment screening, AML, transaction monitoring, and dynamic customer risk rating come into play. These aren't just buzzwords, they're game changers designed to make your compliance more effective and less of a headache. Imagine slashing through false positives with precision and giving your compliance strategy the edge it needs. Head on over to gethawkai.com to sign up for a demo and discover how their platform can revolutionize how you fight fraud and financial crime.
This has been a production of DD3 Media, with all rights reserved. This is provided for informational purposes only. It is not offered or intended to be used as legal, tax, investment, financial, or other advice. We strive to provide accurate and up-to-date information, but will not be responsible for any missing facts or inaccurate information. You comply and understand that you should use any of this information at your own risk. Cryptocurrencies are highly volatile financial assets, so research and make your own financial decisions.